Hi, welcome to Policy on Demand. I'm Sherry Grabow. For companies awaiting U.S. tax technical guidance, the wait continues. Unfortunately, in many areas, and add to the list of pending guidance the potential ramifications of a Supreme Court ruling in Moore versus United States, which raises the constitutionality of the TCJA repatriation tax. So here to shed some light on what to expect are Wade Sutton and Laura Williams. Welcome. Okay, let's get into specifics. I'll start with a corporate alternative minimum tax. Laura, what's the latest on guidance in this area and what companies care about the most?
Sure. So we've received a number of notices this past year. And what the government was telling us is that we should expect an NPRM, which is a proposed regulation, by the end of 2023. We're now hearing that that timing may be slipping into 2024. And so the government's going to face a decision of whether they, try to get a notice or maybe a smaller proposed regulation out by the end of the year to address some of the big questions that have not been addressed to date. The one that comes to mind and is maybe front of mind for most companies is this double counting issue. So that's where the statute tells you have CFC income that's included in a CAMT taxpayer's AFSI. But it also tells you that you include dividends from CFCs and other entities in the U.S. Taxpayers' AFSI computation, which could lead to double counting. And so the government has said they intend to address that issue and fix it, but that would have to be done by regulations.
Gotcha, thank you. So let's turn to foreign tax credit guidance. Treasury issued a notice earlier this year stating that they are continuing to consider issue raised by the 2022 final regulations and also provided some temporary relief extending the applicability date of those regulations. So Wade, what are some of the uncertainties facing companies while that guidance is in limbo? And what should the government be thinking about as it reconsiders those regulations?
Sure. And I guess before getting into what the government should do, let's talk a little bit about what we're anticipating they're going to do in the near term. So based on their comments at panels and other public forums, they're telling us that they're going to extend the application of the notice. And that basically allows taxpayers to apply the old pre-2022 foreign tax credit regulations that looked at a predominant character standard to see if you had a foreign income tax. They also turned off the attribution rules with some exceptions for things like digital, gross basis taxes like digital services taxes. So we're expecting that. I think a big question is that going to be the model, just continued deferral of those rules? Or are we going to see a package in the future? If I'm betting, I think we're going to see more deferrals. We have to keep in mind there's an election, presidential election in 2024. That might have an impact on what guidance ultimately says in this space. And also, I think you've seen the government shift their attention elsewhere for the near term and not want to handle these foreign tax credit regulations up front. The other piece that we're expecting soon is guidance on the creditability of Pillar 2 taxes. And what I think that will say, and hopefully we get this by the end of this year, is that a QDMTT, that's the local minimum tax that you can enact on your profits in country, will be a creditable income tax. But the UTPR and the IIR will not be creditable. And I think that last bit, the IIR bit, is surprising to a lot of people because the income inclusion rule acts very similar to a CFC tax, and those have always been creditable. So I think I'm personally very interested in seeing how the government explains its authority to turn off that credit. And the policy rationale for that makes a lot of sense because if the IIR were creditable, then it and GILTI would operate by reference. There'd be recursive calculations. So you've got to turn that off. But again, kind of open question about can the government do this? It might be a source of controversy in the future. So back to your question, what should the government do? I think if I were them, I would invert the approach that they took in 2022. What I mean by that is back in 2022, they tried to define what a foreign income tax should look like by reference to US standards. We're going to tell you what a good tax looks like. And we ran into a lot of problems with that because I think everyone quickly realized that there's a lot of diversity in how foreign taxes work that are very different from US rules. So I would hope that if they do take on this package, they instead focus on what are the features of a bad tax. What is it about DSTs or a diverted profits tax that's objectionable? And we saw a flavor of that in the notice. Non-duplication was one grounds to separate DSTs from other taxes, or maybe it has something to do with being unconnected from a corporate tax base. So I would focus my attention there as opposed to try to write an all-encompassing rule to tell you what good taxes are.
Okay, got it. Thank you. So I mentioned previously the Moore case, and there are other rulings that we've been anticipating in several court cases. So there's Liberty Global, there's a Coca-Cola company, Medtronic. For this episode, we'll focus on Moore since the oral arguments are going on or actually happened yesterday, and I understand that you attended those. What are your takeaways from that?
Yeah, so I'm going to assume everyone is familiar with the facts, and we'll just focus on the legal issues. And this is just my personal opinion. It's not PwC's opinion, but I think the government's going to win, and I don't think it's going to be close. But it seemed like a majority of the justices seemed bought in on this theory that realization was actually met here. It was met at the corporate level. This Kisancraft, the Indian corporation, earned the earnings, satisfied the constitutional realization requirement. And therefore, the real question is it fair to attribute those profits to the shareholder? And there was a lot of debate about whether and how the government should write an attribution standard. But, I think this theory is a way for the government to rule, the court to rule in favor of the government without doing any damage to Subpart F or partnership taxation rules or things like that. And I think that's really important. This theory, from my perspective, came out of the amicus briefs. And a friend of mine who practices in front of the Supreme Court once told me, you rarely convince justices to change their mind on an issue, but if you can teach them something new that they didn't know before, you can sometimes change their mind in a case. And I think that happened here with the amicus briefs because, one, they showed the justices just how much damage a ruling for the taxpayer would do to the tax code. I think that was loud and clear from a lot of the pro-government briefs. And also this attribution theory, basically, it's okay if someone else realizes the income to attribute it to someone else. I think that was new. That came out of the attribution briefs, the amicus briefs, and convinced, from my opinion, a majority of the conservative justices to go along with the government in this case. So what does this mean going forward? I don't think, this is speculation, that the majority of the justices are willing to say that there is no realization requirement constitutionally. So I don't think people are there. So I think you should expect a narrow ruling that attribution was met here. Now, there's some questions about whether or not the government actually made that argument in their brief. We'll see how that plays out. And then there's going to be an open question about, well, what do you do about taxes on unrealized appreciation? There are a lot of questions or hypotheticals about unrealized appreciation taxes on real estate, mutual fund shares. The only justice that seemed interested in overturning Eisner v. McCumber was Justice Jackson. But everyone else seemed to want to respect the precedent, come to a compromise in a narrow ruling. And so I think mandatory repatriation tax, that will be okay. We'll have questions, and maybe they'll be answered in the spring about mark-to-market taxation proposals. Like you saw Senator Wyden introduced a bill last week on this, a billionaire's tax. I don't know what the future of that will be, but we'll find out soon.
So Laura, the Liberty Global case on economic substance has also garnered a lot of attention lately. What are your thoughts on how that is impacting our clients' thoughts on planning?
Well, I think our clients are very aware of the limited applicability of this ruling in this case, being that it's a district court case in Colorado and the taxpayer, Liberty Global, has said they plan to appeal. Now, the ruling or the court's opinion applied kind of a novel application of economic substance. In the case, the judge went kind of immediately to the two prongs of the economic substance test and then treated relevance as an exception, right? So said there's an exception for basic business purposes. And then, of course, concluded that that was not the case for Liberty Global. I don't think our clients outside of Colorado are thinking that this should change the way that we and they have thought about economic substance historically, meaning economic substance applies to a transaction when it's relevant, right? And their basic business transactions are just simply not kind of susceptible to the economic substance analysis. But what we are seeing is clients asking more and more questions about how they should be doing their documentation, right? There seems to be a willingness to do the analysis and doing more thorough documentation up front, especially around business purpose. And then giving more thought to this relevancy kind of issue, right? What may have been kind of quickly concluded to be a basic business transaction, we're spending a little more time with our clients understanding what exactly does a basic business transaction mean, right? And should they be doing more documentation and finding more support for that position, especially for their files, right? Knowing that the government is becoming more and more willing to assert economic substance on audit.
That's a great segue into a final question that I'll put to both of you. So with all the uncertainty taxpayers are facing around US rules, also a lot of change on the global front, what are some key actions that you recommend companies take into account?
I mean, I would say first, audit and compliance readiness, right? Trying to anticipate what will I need to comply with the rules, thinking about the Inflation Reduction Act, thinking about Pillar 2, right? You're going to have new data needs. And are you able to meet those, right? When these compliance obligations become due. Also, with audit readiness, making sure that your technical positions are well documented in your files, right? Not just the tax technical position, but also your business purpose, right? Knowing that business purpose and economic substance are a focus of the government. Doing modeling now, I think in preparation for Pillar 2 can help you, understand where, you have risk, right? Or where there are kind of vulnerabilities in the system that you could start to prepare for now. I think those are the best practices that we're recommending to clients and that clients are engaging in.
Great recommendations. Wade, your thoughts?
Yeah, I'd just add engage with the government and the OECD. I mean, comment letters are very important. We saw that with the foreign tax credit regulations where the proposed regulations came out. None of the issues really surfaced until companies actually had to apply them to their facts. I think people need to get ahead of things and actually, for example, 987, do the modeling, think about how it affects you, where are the issues you're running into, and tell the government about it. The other thing I'd say is the government, particularly the IRS, has been very open to issuing non-binding guidance to taxpayers to address questions. And that's an easy way to get certainty. And I think taxpayers should think about taking advantage of that. As well as with the OECD, engage in the process. It's a pain in the neck, it's extra effort, tax departments are stretched thin, but I think this is really important to make sure that the rules function correctly.
Great. Well, thank you both for joining us to talk about these important areas to continue to monitor in the international tax space. And thank you for joining us. Take care.